In this video, I'll be explaining when your unemployment income is taxable and how it's reported for tax purposes and the things to watch out for. Good morning, everyone. My name is Mike the CPA and welcome to Money in Life TV. On this channel, I produce videos around finances, investing, and taxes to help people understand these complex subjects so they can build wealth. As you can see, I'm filming from the kitchen again. My wife is utilizing the home office to do her job from.
That's because her work is more essential.
Thanks a lot, Chipper. I want to start off by saying that I really feel for anybody who has been furloughed, who's been laid off during this time period with everything that's currently facing us right now in our economy. But I wanted to produce this video regardless, because whether you've been on unemployment before, whether this is brand new to you, I think it's going to be valuable for you to know tax-wise how this works and get the heads up on it now. Have somebody tell you right now what to expect 12 months from now or when you're filing taxes next year. And that's what this video is about. And there's not a lot to cover, but there's just a few things I want to cover with you where I see people get in trouble. The first thing is I see people thinking that their unemployment is not taxable. Now, in most instances, unemployment is a state function. So for example, I live in California. So if I receive unemployment from the state of California, for California income tax purposes, the money is tax exempt. Tax exempt money. But for federal tax purposes, the money is taxable. So taxable for federal purposes, but not taxable for California income tax purposes. And each state's a little different. I don't think most states tax their unemployment, but it's something you got to look out for. So if you were receiving unemployment, if you were like a federal employee or federal government employee and you were receiving unemployment, it's very likely that you might not have to pay federal income taxes on that, but you might have to pay state income taxes on that. So depending upon what state you live in, based on your locality of where you're living, be sure to look up the rules online for unemployment and whether or not that income is taxable to you within the state you reside. As you're collecting unemployment checks throughout the year, or direct deposits I should say, eventually what happens at the end of every year, all that income that you receive from unemployment is summarized on a document called a 1099-G. And what that does is, I have an example on screen that we can look at just so you can learn how this works. Is in this example, we're looking at a person who receives $18,000 in unemployment throughout the year. You'll notice, and that shows up in box 1. I'm not going to cover all the boxes on this. That's not really the point of this video, but it is taxable, right? Or it may be taxable for you. So if you want to stay ahead of this tax-wise, what you can do is, you'll notice in box 4, see where it says federal income tax withheld? You can actually choose to withhold money every month from your unemployment so that you don't fall behind on your taxes. And you'll notice too, in box 11, you might have a situation where your unemployment is taxable for your state. Well, then in box 11, you can actually hold state income taxes on that money as well. So, maybe you get a check for, I don't know, $1,200 a month, let's just say, I don't know, $1,500 a month, whatever it could be. Maybe you withhold $100 per month from that, just to stay ahead on your taxes. And it's not a perfect science, but it's something you can do if you're afraid of getting behind on your taxes, which I think would be a lot worse than most people realize. It's a real pain in the neck to owe the IRS. It is not the creditor anybody wants. It's like owing the mafia money. You don't want that kind of scenario. They will bug you to death if you owe them. That is one thing you can do. You can also if you don't want to have money withheld from your unemployment, what you can also do is you can choose to make estimate payments. I have 3 different videos on this channel regarding estimate tax payments if you want to pay your taxes in that way on this income. If your current W-2, if you're an employee, it probably isn't going to cover any of this kind of extra income you're making. And so estimate payments may be another route for you to just paying a little extra in tax every quarter on this money, or for however long you're making or receiving unemployment income, just to stay ahead of taxes if you don't want to withhold money from each and every of your unemployment checks. Let me show you how this works. So you're going to get the statement at the end of the year or the beginning of the next following year, so in 2021, you'll actually receive that 1099-G for 2020 for all that unemployment income you received throughout the year. And now this is a 2019 tax return, obviously, because 2020 forms aren't out, but just pretend that this is 2020 forms. But the way that works, and I've shown you a real example just so you can see this for your own two eyes. Pretend you had no other forms of income. Well, if your only income is that $18,000 of unemployment, then you would report that amount right here on line 7A. It also shows up on, actually the original amount shows up on Schedule 1. Let me flip to it. So on Schedule 1 of the 1040 on line 7 is where unemployment compensation is reported, and that number that then transfers from line 9 back up to page 1 of your 1040. So in this example, the way this calculates out is we take the $18,000 because this is the person's only income. We then back out the standard deduction, and we're presuming this person files single. So if for a single filer, for most people, their standard deduction, which is a set amount, it's just given to you, is $12,200. If you know how the standard deduction works, it's going to reduce your taxable income dollar for dollar. And so we can take that $18,000, we're going to subtract out the $12,200, and this person's going to have a taxable income of $5,800 after the standard deduction applied. Now, if you're married, let's say you and your spouse are married, maybe one of you is unemployed, maybe both of you are unemployed. Well, your standard deduction would be higher for you in that case. So if you're married, it's double this. So your standard deduction would be $24,200. But let's follow through this example just so I can show you how your unemployment is taxed. So how much money is being taxed of this unemployment for this person? $5,800 after the standard deduction. So the tax calculates out on that is $583 in tax, and that's what a person would owe if they filed single with that amount of unemployment income. At the end of the year, they would have to either withheld or will have to pay that amount of money, $583, to the IRS by April 15th, or whatever the due date is, if hopefully this thing is behind us by then, of the following year. So that's something to be aware of. Now, as you can imagine, the way our tax system works here in America is it's progressive. So meaning the more money you make, the more taxable your income becomes, or that you're going to start to, if you guys heard of the marginal tax rates, well, your marginal tax rate starts at 0, then it goes up to 10%, 12%, then 22%. So if a person's making wages on top of this, dividends, rental income, and they're still, so let's say a person has received wages for a while before they got unemployed, they received rental income, this, that, and the other. Well, that unemployment is because they have all those other forms of income, and at a higher income amount, more of it would be subject to tax. And so it would affect their taxes even more the more money they have. So the less the person makes, the less taxable something is. The more money a person makes in total, the more taxable something becomes. This is something to be aware of. On the flip side here, you could also have no tax. So let's say you made $12,000 in unemployment, but your standard deduction is $12,200. Well, that leaves you with a taxable income of negative $200. So in that instance, for a single filer, they would owe nothing. None of their unemployment would be taxable income. That's just how that would work. Now for a married couple, like I said, let's say a married couple is receiving $20,000 a year in unemployment for 2020 because of this whole situation. Well, their standard deduction is $24,000, and we're assuming they don't have kids, okay? We're just gonna pretend they don't. Their standard deduction is double the amount of the person who filed single. So once again, they end up with a negative taxable income, and you can't have negative taxable income, and it would mean they would pay no tax. But it's just once you go above that standard deduction amount, then that income, that unemployment income, starts to become taxable. So I wanted to make this short video to make you all aware of that, and so you're not blindsided. You're not going to get this sort of education in school. I highly doubt they're ever going to teach any sort of tax in school. And I like to produce a lot of educational videos on this channel to help people with things like this, with real life skills such as this, so they can understand ahead of time what's coming down the pipeline tax-wise and stay out of debt with the IRS and just overall be able to better manage their finances. So I hope you found this helpful. If you did, I would really appreciate it if you'd leave a like on the video. If you definitely, please consider sharing this with others, because I know there's a lot of people who've been furloughed or, unfortunately laid off due to the current circumstances. And just so people know how this stuff works. I think it's really important. Well, I love you all. Feel free to leave your questions and comments below. I try to respond to as many people as I possibly can. If you have not already subscribed to our channel, I would encourage you to do so. We'd love to have you as part of this community. I try to produce one new video per week around finances, investing, and taxes. And if you do subscribe, please be sure to hit that little bell notification icon, as it will notify you every time we release new content here on Money and Life TV. All right, ladies and gentlemen, I'm gonna wrap things up here. I'll be sure to see you down in the comments. Have a wonderful week, live life uncaged, and I'll see you in the next episode. Peace.